Dogecoin is stuck below 10 cents, and the next move may depend less on hype than on whether buyers can finally break a stubborn supply zone. The pressure point is simple. Doge is trapped under 10 cents, and traders are staring at the same ceiling again. Dogecoin stuck below is the search phrase, but the immediate question is where the next break or failure actually sits. The tension here is simple. The loudest claim is not always the part with the strongest proof. The token kept trading just under the 10 cents mark, with repeated tests of a resistance band between roughly 0.098 and 10 cents, while buyers continued to print higher lows underneath that ceiling. The repeated failure at the same level matters because compression becomes more meaningful each time the market tests a ceiling without resolving it. That gives the story a hard anchor before sentiment starts doing the storytelling. Analyst commentary pointed to a so-called decision zone, where compression keeps building, but a definitive pattern confirmation still has not appeared. In easy English, a decision zone is the part of the chart where one side is expected to finally give way after several failed pushes. This is where structure matters more than surface excitement. For people typing Dogecoin stuck below, the next useful step is to separate what is already operating from what is only being promised. Dogecoin briefly traded above 10 cents within the last 24 hours and then slipped back under it, ending around 0.09484 after a daily drop of 3.75%, which reinforced the level's importance. That detail is often where the risk moves from theory into actual exposure. The mechanism is compression. When price keeps pressing the same resistance while lows rise, the market stores energy, but the direction only becomes useful once one side actually wins the breakout fight. For anyone searching KW, the important detail is that range trading can look quiet right before it stops being quiet. Once that mechanism is visible, the pricing story gets easier to read. That matters because Dogecoin is liquid enough that a clean move can pull in momentum traders fast. But until the ceiling breaks, the same range can keep trapping both impatient bulls and traders who short too early. The longer price sticks near the same threshold, the more traders cluster around the same breakout and breakdown triggers. This is why users, traders, and treasury desks can react very differently to the same headline. What remains unclear is whether the current structure is accumulation before a push higher or distribution before another fade. The repeated tests matter, but without confirmation, they do not answer that question. The next signal is simple. Either Doge closes cleanly above the 10-cent zone with follow-through, or the market rejects again and the range remains the story. The uncertainty is part of the valuation, not a side note after it. That is why Dogecoin stuck below ends with one hard test, whether the next move comes with healthier liquidity and cleaner structure than the last one. Compression stories always sound quiet right until they stop being quiet. That is why the next clean break matters more than another round of guessing inside the range. Once the noise is stripped away, follow-through is the only thing that can confirm the pitch.